Good afternoon, everyone. I'm Kat. I'm the Policy and Communications Director at MedGlobal. And MedGlobal is a humanitarian health nonprofit organization working to save lives and serve vulnerable communities around the world by providing health services and building healthcare resilience. Our health services support refugees, displaced persons, and other vulnerable and marginalized communities in crisis-affected and low-resource settings. We provide healthcare in Bangladesh, Yemen, Gaza, Syria, Lebanon, Pakistan, Sudan, and other communities in countries facing crisis. And today we're hosting this webinar with the Azzad Asset Management Group, who will discuss calculating Zakat on financial assets. So it's my pleasure to introduce Fatima Iqbal, a senior investment strategist and financial planner at Azzad Asset Management, and Bashar Qasem, president and CEO of Azzad Asset Management. Fatima and Bashar, thank you again for hosting this webinar with MedGlobal, and I'll turn it over to you.
Thank you so much, Kat, and assalamu alaikum to everyone joining us, and welcome to this webinar on calculating Zika on modern financial assets. So there's a lot to learn about Zika, which is the obligatory charity owed by Muslims. And this presentation will provide a brief overview of who should pay Zika, what types of property it is owed on, and how to calculate it on certain assets. I'll just take a moment to introduce ourselves for you today. We're also joined, as Kat mentioned, by Azzad's president and CEO, Bashar Qasem. Bashar holds the CSAA designation, which is the Certified Shari'a Advisor and Auditor. He is one of the very few in the US who hold that distinction. And my name is Fatima Iqbal. I'm a certified financial planner at Azzad, and I'll be giving the main presentation today, and Bashar will join us for the question and answers at the end. Before we begin, we also want to let you know a little bit about Azzad Asset Management so that you know where we're coming from when we talk about Zakat. On your screen, you'll see 7 of the services Azzad provides for our clients. And these include calculating purification and Zakat amounts, which is the topic of today's webinar. Azzad follows halal investing guidelines from AOFI, which stands for the Accounting and Auditing Organization for Islamic Financial Institutions. The Zakat calculation guidelines in this presentation follow AOFI rules, and AOFI's comprehensive standards are based on a consensus by internationally renowned Islamic finance scholars from 8 schools of Islamic thought. But please note that this presentation is not intended to be comprehensive in all schools of thought. We take Sharia governance and compliance very seriously at Azzad, and in keeping with the guidelines from AOFI, we have an active Sharia advisory board and an in-house Sharia auditor. Additionally, our Zakat and purification calculations are audited for accuracy by a third-party verification firm, the Islamic Finance Advisory and Assurance Services. Again, this webinar is intended to provide a brief overview explaining the general principles of Zakat calculation, but you can always reach out to us to learn more by contacting us at 888-86-AZZAD. So now let's turn to today's topic, which is Zakat. So first, let's understand the basics of Zakat. Zakat is a financial obligation on every Muslim who owns a certain kind of assets worth more than a set amount, which is called the nisab. If they have owned those assets for at least 12 lunar months, also referred to as the hawl. Zakat is mentioned in the Quran 81 times, and it's often mentioned along with salah, or prayer. While giving to charity is a financial transaction, it's also an integral part of a Muslim's spiritual health, and specific care should be given in making sure it's handled correctly. Zakat is truly an obligation and opportunity to bless our wealth by giving it to help those in need. Zakat is obligatory on every living Muslim, regardless of their gender, age, or mental status, who owns assets that meet the other conditions of Zakat. However, if certain conditions are not met, then it does not remain compulsory. So let's take a look at the conditions that must be met before Zakat becomes obligatory. I'll just list them now and then explain them in the next few slides. The conditions are owning at least the minimum amount of wealth, known as the nisab, the lapse of 1 lunar year, complete ownership of the assets by a particular person. There should be no other reason an asset is not zakatable, such as insolvency, and the assets must have some real or assumed growth. So first, the total amount of wealth owned by an individual must meet a minimum threshold, which is again called the nisab. And while prophetic hadith described the threshold or the nisab for different assets such as gold, silver, and livestock, the question we find ourselves in is what is the nisab that is relevant on our modern financial assets? The nisab can be determined based on the nisab of silver or gold, and this is equal to the current market value of 85 grams of gold or 595 grams of silver. According to the Hanafi and Maliki juristic schools, the nisab is calculated at the beginning and end of the year and changes in between are overlooked. Any increase in property after reaching the nisab during the year is to be included in the total sum counted for zakat. This is considered the easiest and most applicable among the other juristic views, which has made the majority of scholars adopt it. The value of 85 grams of gold in early April this year was around $4,800. Therefore, any Muslim who owns zakatable assets worth $4,800 or more, and who has held these assets for 12 lunar months, should pay zakat on those amounts. We'll go over which assets are zakatable in a moment. So what happens when wealth reaches the minimum amount or the nisab? The next condition is that these assets should be held for a full lunar year, starting from the day it reaches the nisab. The Arabic word hawl refers to this holding period of 1 lunar year after which zakat becomes due. Zakat is not due on a particular day for everyone, but it should be paid once per lunar year. Many Muslims choose to pay their zakat during Ramadan, both for the additional blessings of giving during this month and because it's easy to remember from year to year. Each individual can set their own hawl date based on when they have held their zakatable assets for a minimum of 1 lunar year. For people who choose to set a hawl date based on the solar calendar, the percentage for zakat is raised up to 2.577% instead of 2.5% because the solar calendar is a little bit longer than the lunar calendar. There are 5 factors that define complete ownership. Those are settling, ownership vesting, accessibility by the owner, disposable by the owner, and no interference by others. Before we discuss how to calculate zakat on stocks, let's briefly recap the kinds of accounts that can hold stocks and their ownership criteria. For these accounts, we should refer to the conditions of zakat to see whether the owner has complete ownership. Owners have full ownership in accounts like IRAs and education savings accounts, but they may have to pay taxes or a penalty when withdrawing. For accounts with full ownership, zakat is owed on the amount owned after taxes and penalties. However, for accounts that do not have full ownership, like 401k accounts, where a participant is not enabled to withdraw money, there is no zakat due since ownership is not complete. The third condition that must be met is that the assets must be completely owned by a particular person or family. Assets owned by an organization or government are not zakatable. Zakat is liable on the assets that are completely owned and vested for the owners. And complete ownership requires that assets be accessible and disposable by the owners without the interference of others. So if you completely own an asset, but would have to pay taxes or penalties if you sold it, this still does not nullify the fact that you own it. So for example, an individual who has an IRA can access the money in the account even though they would have to pay a penalty in taxes if they sold it before reaching retirement age. This fact does not prevent the IRA from being zakatable, but zakat would only be calculated on the amount that would be left after applicable taxes and penalties. On the other hand, an employee's 401k or 403b plan may not allow them to withdraw while they are still at their current job, or if they are below the distribution age. This 401k or 403b is not zakatable then until the employee either leaves that job or reaches the age when they're allowed to withdraw from the account. Each employer's plan may be unique. So if you are unsure whether you're unable to withdraw money from your 401k account, it's important to read about your plan's provisions in your 401k's summary plan description, which you can get from your employer. A person must also be solvent in order for zakat to be due from them. If a person has debt that is immediately due that is greater than what they own, then they are not liable for zakat. In calculating zakat, we start with the zakat base, which equals all zakatable assets minus liabilities or debts that are payable by the hawl date. Zakat is not obligatory on wages, salaries, and income at the time of receiving such income. Zakat is assessed on conditions we discussed earlier, and again must meet the ownership and hawl period requirements. Assets that are zakatable include gold and silver, cash equivalents, assets intended for trade or sale, good current debt, livestock, crops, and minerals. All cash, gold, and silver are liable for zakat at 2.5% based on their values on the day of the hawl. If the hawl is linked to the solar year, again, zakat is 2.577%, again, to make up for the difference between the two calendars. There are certain assets on which zakat is not owed. One asset where zakat is not owed is personal use property. This can include one's personal residence, vehicles, clothing, and other personal belongings. Assets that are considered to be capital goods, such as tools or factories, are also not zakatable themselves. However, the income that is derived from them is zakatable, again, upon meeting the conditions we discussed earlier. Assets intended for retained ownership and for the purpose of deriving income are not zakatable. This means that zakat is not owed on the current market value of investment property intended for income. Instead, income derived from them is zakatable, as is the case with capital goods. So for example, zakat is not paid on the market value of a rental property whose intention was for income. However, income that's derived as rent and is again held for the hawl period then becomes zakatable. Only halal and lawful assets are liable for zakat, and no zakat is required on haram or unlawful assets, such as money derived from interest, gambling, alcohol, work, stolen money, bribe money, or any other kind of impure money. And such assets or money must be returned to their lawful owners or donated to charity as purification. Now, purification is not a form of zakat or sadaqah, and it's only intended to rid oneself from impure money that one never intended to benefit from. In modern financial times, this includes securities or stocks that are deemed not to be halal according to Sharia investment guidelines, including financial options and derivatives. Again, we at Azzad only use halal investment guidelines established by AYOFI and adopted by the Azzad Sharia Advisory Board. Now let's look at how debt relates to zakat in cases where debt is owed to you or whether you owe debt to others. This relates to modern financial assets since bonds are also a form of debt. It's important to know that interest-based debt securities, including bonds, banking notes, CDs, commercial paper, money markets, and others that are liquid are liable for zakat only on the principal amount or market value, whichever is lower. Any gain due to interest accrued or market appreciation is not recognized as lawful and it's not eligible for zakat. And again, such gain should be considered unlawful and purified by donating to charity. Let's take a look at instances where debt is owed to you. If you make a loan to someone else, you owe zakat on any amount repaid as of the hawl date if it's in good standing. If the loan is past due and in bad standing, no zakat is owed until the owner recovers the debt and the zakat is paid once and for all for the past years it was in bad standing. If you have taken a loan and owe debt, the amount due before the hawl date is deductible from one's zakat base. However, debt payments that are due after that hawl date are not deductible from the zakat base. So for example, a person may deduct their current home mortgage payment from their zakat base, but not the entire loan amount. The interest portion of any debt acquired in a non-halal way should not be deducted from the zakat base. However, one may deduct debt that is a result of acquiring commercial assets from one's zakat base. Zakat is obligatory on assets that have been held and saved for one full lunar year after reaching the nisab, the minimum amount of wealth after which zakat is due. This, of course, excludes any interest income that may have been unlawfully earned during that time. Now, most of us acquire money at different times throughout the year, such as from salary, inheritance, gifts, rental income, etc. If you choose to be very specific and only pay zakat at the time it becomes obligatory, then you can track the earnings and pay zakat for each amount separately when 1 year has passed from the date on which you took possession. But an easier method is to pay zakat on all the assets you've held for 1 year since reaching the nisab. This will bring a greater reward and raise you higher in status. It is easier and it's also more generous towards the poor and needy and others who are entitled to zakat. So for example, if 1 year ago you had $10,000 in your account and the value dipped mid-year to $5,000 and now you have $15,000 in your account, with this method you would still pay zakat on the $15,000. So we've gone through who is liable for zakat and what assets and account types are zakatable. So let's now talk about the calculation of zakat on stocks. We'll use common stocks as an example since we get a lot of questions about them. And of course, our clients at Azzad know that we calculate zakat for them on an annual basis, and we send them a statement showing the total amount to be purified and paid from their portfolios. But this calculation can be used for shares of publicly traded companies that you may acquire. For the purpose of this explanation, we'll assume that the stocks held follow halal investment guidelines, since again, zakat is not owed on shares of stocks that are not halal. There are two basic intentions for purchasing a stock, either for the growth and appreciation of the stock, or for the income and dividends it can provide. With this distinction, let's take a look at how we can calculate zakat on a portfolio of stocks. While a shareholder may reap the benefit of both growth and income from a particular holding, the original intention of why it was purchased is the key. So unlike taxes, we don't have the IRS looking over our shoulder, but zakat is a matter between yourself and God. So your intention regarding your investment determines which calculation to use. The zakat of a portfolio of stocks will be calculated by adding the zakat owed on income stocks and the zakat owed on growth stocks. So you may be wondering why differentiate between growth and income stocks. Stocks held for the purpose of growth and appreciation are like assets that are held for the purpose of trading and are considered commercial goods, or in Arabic, arud tijara, where arud means non-cash and tijara are items intended for profitable trading. For these shares, their zakat base will be based on the total closing market of the shares owned, or net asset value on the held date. And then again, the net asset value is then multiplied by 2.5%. So to give you an idea of how a zakat calculation on growth stocks is done, let's take an example of an IRA account investing in a growth stock that has a market value of $50,000 on the held date. To calculate the zakat, we must account for a 10% penalty if the person is under the age of 59.5 and also their tax bracket. So let's assume the person is under the age of 59.5 and they have a 15% tax bracket. We calculate the zakat by multiplying $50,000 times 1 minus the penalty rate times 1 minus the tax rate by 2.5% zakat rate. This gives us the zakat due on the amount they would have in hand if they were to withdraw from their IRA account. Now, stocks held for the purpose of deriving an income, such as dividends, are different from urdu tijara, since the primary intention of purchasing these shares is not for trade and appreciation. The zakat is actually not paid then on the market value of the shares owned, but on the zakatable assets in the balance sheet allocated to the shares owned. And a balance sheet is the financial statement that lists a company's assets and liabilities. For income stocks, the shareholder can consider him or herself as part of the company and owning a share of the company itself, including all its assets and liabilities. The zakat must be calculated on the company's zakat base or zakatable assets, and the person must calculate the respective share of zakat that falls upon his or her shoulders from the company's due zakat. We understand that calculation of income stocks is not as simple as gross stocks, and it's again one of the things that we calculate for our clients. As a reminder for all of us, these are the categories or people that are causes that are eligible to receive zakat. We sometimes get questions about the difference between the masakin and the fuqara. And the difference between the masakin, or the needy, and the fuqara, or the poor, is that the poor have nothing, but the needy are those who have something, but it's still not enough to live decently. Again, the masakin here, they may have more than the poor, but they still lack adequacy. As Allah referred to the masakin in the Quran in Surah Kahf, chapter 18, verse 79, in the story of Khidr and Prophet Musa alayhi salam. The masakin were the poor people who owned a ship, but still actually worked in the sea. Let's talk briefly about purification, which is different from zakah when we're talking about investing. Part of the process of making a stock investing halal is screening companies' lines of business, as well as their financial ratios. On your screen, you'll see some of the screens and ratios according to AUFI. Sometimes it's not possible to know exactly where all of a company's revenue comes from, or the revenue may be a trivial amount. Because of this, Muslim investors should purify their investments by donating to charity the small amount that may have come from that impermissible source. Again, purification is different from zakah and should be calculated and deducted before calculating the zakah. Abdullah bin Umar was actually a companion of the Prophet Muhammad and the son of Umar bin Khattab. And in reference to purification, Abdullah bin Umar said, "To return 1 dirham of haram is more beloved to me than paying sadaqah of 100,000 dirhams." And then he continued by adding another 100,000 dirhams and another 1,100 dirhams until he actually reached 600,000 dirhams. So this just gives us an understanding of the importance of purification. At this point, we'd like to open it up to anybody who has any questions that they'd like to ask. You can actually type that into the question and answer box, and we'll be happy to answer any questions. Bashar, I'll get started by asking a question that's often very common is, again, whenever you have property or land, how should you calculate the zakah on it? Some people may be buying a property to rent out. Sometimes it may be land, which is, purchased for the appreciation in time. So how would you handle zakah on property?
Yeah, that's a very good question. The property and land, real estate, home, it depends on the purpose. Like, the status of the property, is it really intended for trading or intended to use it for personal use, or intended maybe for rental, So if it's really intended to be used to trade it, to benefit from make a profit by trading it later, like people who are, for example, flipping houses or real estate properties in general. So that dictates exactly how you do the zakah. If it's really intended for a trade, then we treat it as urud tijara. So we pay the zakah based on the market value at the date of the hawl. But if it's intended for personal use, like the house that you live in, or maybe a second summer vacation house that some people have, then this is not really zakatable, because these houses themselves, they're not categorized as zakatable assets, what we call the reason, the illah, for the zakah. But if they are rented and or leased for someone, then again there is no zakah on the principal, on the base of the house or the market value of the house or the value of the house, but there is a zakah on any earned income that is lasted the whole haul. So in other words, let's say you rented the house for $10,000 the year. From that $10,000 you earned, but the amount that lasted for whatever reason, only 5,000, then you pay the zakah on the 5,000 only. Remember, zakah is actually a balance sheet item, is not based on an income. There is no basis for zakah to be paid on an income. So that's how you pay the zakah on real estate property. So whatever intended for, if it's intended for trading or flipping, or then the zakah on the market value. But also keep in mind that if you use it to trade it in, to buy and sell frequently, then whatever debt you incurred in financing that trade, that is also deductible from the zakah base, from the value of the house. But if you have a house that you live in, or you rented a house that is not zakatable based on the market value, even if you have debt, that debt is not deductible on the other side. So you have to keep the balance between, like, taking into consideration the effect of that in your zakah.
This actually leads us into one of the questions that came in. So let's say you have disposable savings of $100,000 and you have a mortgage of $300,000, but your monthly mortgage is $5,000. How would you calculate zakah?
It's a very good question. So now the mortgage that you're using, this is probably, I assume this is the mortgage that you're using for your house, and your house is not zakatable. So the mortgage, the total debt, the outstanding debt balance, you cannot deduct that. Only you can deduct the amount that is due before the haul. If there is delinquency, for example, money that is due that has to be paid right away, yeah, you can deduct it. But most of the people actually, if they are in normal financial situation, they're on time when they pay their debt. So I don't expect that people will be able to deduct more than probably a month of monthly payment, for example, if it's due before the haul. So in this case, the zakah on the 100,000, you will assess, and assuming that zakah you earned it and lasted for you the whole year. So like, let's say you started with 100,000, Ramadan, let's say you make your haul Ramadan first of last year, and now you have Ramadan this year, then you pay the zakah on the $100,000 of that saving without deducting any mortgages.
Even if, I think the clarification, even if let's say there's a 5,000 monthly mortgage payment due now.
Yeah, if it's really due before the haul, yeah, you can deduct that. So in this case, you will pay the zakah on the 95,000.
Okay. Another question is, can you pay zakah to provide healthcare of refugees and displaced people?
Yeah, so if they fall within the category, the 8 distribution categories, and this is really very flexible. They could fall within the poor, what we call the fuqara, or the needy, the masakin, or even ibn al-sabil, the refugees. Yes, I think this is really a very flexible a cause where these people they would be eligible for zakah. Of course, we're excluding because some you may find rarely. Of course, I want to assume in practical life those people who are really subjected to wars and they fled their lands. Most of the time, I would say 99%, they will fall within that category. So yeah, in general, they are eligible recipient for your zakah.
What about, we have a question about jewelry. Should we pay zakah on our jewelry, gold and silver jewelry?
That's a very good question.
Or even precious stones?
Good. So like jewelry, As a jewelry, again, depends on what they are intended for when you purchase them. If they are intended to use them to trade them, for example, buying and selling, that will fall within the category of a trade, and that they become zakatable. Most of the people for personal use, jewelry for personal use, they're not zakatable except if they are gold and silver. And again, there are different opinions, but the Hanafi school, they don't distinguish between gold that you own for the purpose of ornament or that you own for example, use it as a saving. So those are zakatable. But the other fiqh school, only the gold and silver, as a gold and silver, not as a jewelry, they intended for use as a jewelry or as an ornament, they're not really zakatable. But again, if that becomes so much, in other words, you for example, you have 10 kilo gold and silver, but you don't use them that frequently, and many people, they may purchase those as a form of security, as a deposit or something like this, as you know, in our culture. Then you have to be honest with yourself, and those may become actually zakatable if your intention that to use them as a saving or as a security. You have to assess how much the value that is beyond the amount intended to be used as an ornament or as a jewelry, and then you have to take 2.5% of that value and then pay that as the amount of zakah. Yeah, that's for the jewelry. Like diamond and other type of ornaments, those are not really zakatable items, again, if they are used or intended to be used for personal use as an ornament. But gold and silver, they have a special situation.
We have a question which is asking for a little bit more detail about the rules of zakah on retirement funds and college funds. And I would say that's, again, a very common question that we get, and a lot of confusion around that. Before I ask Bashar to give his thoughts, I would just, like to add, really, if you think about zakah, try to bring it down to those criteria that we talked about. And ownership is one main criteria to understand for retirement funds and college funds. So if you maintain complete ownership on an asset, meaning that you have the ability to withdraw the funds at any time, regardless of penalties and taxes, then that means that you will pay zakah on it. However, if you're restricted by any way, maybe your 401k plan will not allow you to take in-service distributions, or it is for example, a pension plan where you do not have access until you are actually retired. In that case, you do not have full ownership, and so you wouldn't pay zakah. But Bashar, I'll ask you, how does this also apply to college funds?
Same thing. We apply the ownership criteria, what we call illatu tamam al-mulk, that you have complete ownership. And the complete ownership can be tested easily to see, is there anything prevent you from accessing that money and disposing that money? If there is no way for you to access it and dispose it, then that money is not zakatable. But if you were enabled, even if you choose not to, but you're enabled, then that becomes zakatable. So if we apply the same thing into college funds, yes, college funds, you can really take it out. You will be subject to penalty and maybe taxes. So you assess that amount of penalty and taxes, you reduce it from your zakatable base, what we call al-wi'a is zakawi, and then you assess the zakah on the net. Yeah.
There was a question asking if anyone can call and ask questions about their zakah. You're more than welcome to reach out to us. You can find all of our information on our website, which is azzadasset.com. There's also a contact us page where you can reach out and schedule a consultation with one of our advisors, and inshallah, we'd be happy to try to help answer any questions that you have on zakah. And with that, I'd like to thank MedGlobal for this opportunity to talk to you about Zika. And I would like to hand it back over to Kat.
Great. Well, thank you so much, Fatima and Bashar, for leading this very informative webinar and taking your time to answer all of these questions. For any additional questions about MedGlobal, please don't hesitate to reach out to us at connect@medglobal.org. And to let everyone know, we are, of course, scaling up our support for critical health services in Gaza, in Yemen, Syria, and other countries around the world during this month of Ramadan, and would love for you to consider supporting these programs in your giving. You can learn more about our programs in the link in the chat, as well as at medglobal.org/Ramadan-Kareem. And thank you again, Fatima and Bashar, and Ramadan Mubarak to everyone attending.
Ramadan
Thank you.
Mubarak to you. Thank you so much.